Hey everyone, and welcome to our deep dive today. We're going to be taking a look at Workday, and specifically their Q3 earnings for fiscal year 2025. We've got their official report right here, filed with the SEC.
Ready to kind of go a little bit deeper than just the headlines and figure out what's really going on with this major player in the world of enterprise software.
Yeah, always interesting to peel back the layers of these things and see what's really going on.
Okay, so I was looking through the press release, and one thing that really jumped out at me was just how much Workday is talking about AI. They're not just adding AI features here and there. They're really talking about it as the core of your whole platform now. So what's the big deal about that, and how does that connect to their financial results? Well, I think it's really significant because they're essentially betting the future of their business on this idea that AI is going to fundamentally change the way that businesses manage their people and their money. And if you look at their numbers for Q3, they reported total revenue of $2.16 billion, which is a 15.8% increase year over year. Their subscription revenue also grew at the same rate, hitting $1.959 billion. So those are some pretty solid indicators that this AI-focused strategy might be paying off.
Yeah, those are some impressive numbers. They must be feeling pretty good about how things are going.
Yeah, and their guidance for the full fiscal year 2025 suggests that they're expecting this momentum to continue. They're projecting subscription revenue to reach $7.703 billion, which is a 17% jump. So to understand why they're so confident, I think we need to kind of dig into what's driving this growth.
Yeah, so besides AI, what else is fueling these strong results?
Well, Workday is a really major player in the enterprise software world. Basically, what they do is they create software that helps big companies manage things like payroll, hiring, finances, all of that. And they've been doing this for a while now, and they've really established themselves as a leader. For example, they are consistently recognized as a leader in what are called Gartner Magic Quadrants, and these are basically like report cards from industry analysts. And Workday consistently gets top marks for their cloud-based software, for managing people, which is known as HCM, and for managing finances, which is known as ERP.
Okay, so they're already a big deal. But what specifically about their Q3 performance makes them think they can hit these ambitious targets for the rest of the year?
Yeah, so one key indicator is their subscription revenue backlog. This basically means that they already have $6.98 billion in future revenue locked in from existing contracts. And that number grew by 15.3% year over year, which is a really positive sign.
So that backlog gives them kind of a safety net and shows that they're good at turning potential deals into actual guaranteed income.
Exactly. And now, circling back to AI, it's not just talk. They've actually been investing heavily in AI. And they've launched some really innovative solutions. For instance, at their recent customer conference, they announced Workday Illuminate, which is their next generation AI engine. You can think of it like a powerful brain that's making all of their software smarter. And they're integrating this AI engine into a lot of their existing products too.
So it's not just like a separate AI product. They're weaving AI into everything they do.
Precisely. And they're even using AI to streamline their own internal processes. So AI is creating value for their customers, but it's also helping them run a more efficient and profitable business.
That's smart. And they're also seeing success with what they call customer consolidation on their platform, right?
Yes, and that's another big factor driving their growth. More and more customers are choosing to use multiple Workday products. So instead of having separate tools for HR, finance, all these different business functions, they're just getting everything from Workday. This makes things easier for the customers. But it also really deepens Workday's relationship with them.
And it seems like that customer trust is particularly important right now. Given all the economic and geopolitical uncertainty in the world, even the CEO mentioned this in the report.
Absolutely. When things are unpredictable, businesses tend to stick with solutions and partners they already trust. And Workday seems to be really positioning themselves as that reliable choice. They're projecting a non-GAAP operating margin of 25.5% for the full fiscal year, which basically means that they're expecting to maintain a really healthy profit margin.
Okay, so it sounds like things are going pretty well for Workday. But even with this positive momentum, we have to talk about the potential risks and uncertainties they mentioned in their forward-looking statements, right? I mean, projections aren't guarantees. What are some of the things that could throw them off course?
Yeah, you're absolutely right. So let's start with competition. The enterprise software market is a jungle out there. There are tons of companies fighting for market share, with new players and innovations popping up all the time. So Workday really needs to stay ahead of the game and keep innovating if they want to keep winning.
So resting on their laurels is not an option.
Nope, not at all.
What else should we be mindful of?
Well, the global economy is a big one. A major economic downturn could definitely affect their customers' willingness to spend money on software. and that's always a risk, especially with all the uncertainty out there right now.
Good point. And we can't forget about their recent acquisition of Evisord, which is that AI-driven document intelligence platform. Successfully integrating Evisord into their existing offerings is going to be a big challenge.
Yeah, merging two companies is never easy. It can be a real headache to blend different company cultures and make sure the technology all works together seamlessly. So they'll need to execute this integration perfectly if they want to see the full benefits of the acquisition.
Yeah, it's a lot to handle, but it sounds like they're on top of it. They mentioned achieving a non-GAAP operating income of $569 million for Q3, which is 26.3% of their revenue. Now, just for clarity, could you explain what non-GAAP means? I think that might be a little bit confusing for some listeners.
Sure. So non-GAAP is basically a way of looking at a company's finances. That excludes certain costs, like stock-based compensation and acquisition-related expenses. It's kind of like if you were looking at your own personal budget and you were trying to get a sense of how much money you had to spend. You might exclude things like one-time expenses, like if you had to buy a new car that year. So it gives you a clearer picture of how the core business is doing.
Okay, that makes sense. So we've covered a lot of ground here. We've talked about their strong Q3 performance, their focus on AI, the factors driving their growth, and some of the challenges they're facing. But before we move on to the next part of our deep dive, let's touch on their guidance for Q4 and the full fiscal year 2025. What are they projecting for the next quarter and the rest of the year?
So for Q4, they are projecting subscription revenue of $2.025 billion, which is a 15% growth rate. They also expect a non-GAAP operating margin of 25% for the quarter.
Okay, so it seems like they're expecting continued growth, but at a slightly slower pace than Q3. Does that indicate a potential slowdown, or is there another explanation?
It's important to remember that their Q4 guidance tends to be a bit more conservative because it's their busiest season. They often see a surge in business towards the end of their fiscal year. So it's not necessarily a sign of a slowing momentum, it's just a reflection of their typical business cycle.
Interesting. So they're still projecting solid growth, but we should keep in mind that these are just projections. Past performance isn't always a perfect predictor of the future.
Exactly. It'll be really interesting to see how things actually play out. And speaking of seeing how things play out, I think in the next part of our deep dive, it would be beneficial to dive deeper into the competitive landscape. What are your thoughts on that?
Yeah, absolutely. I think understanding their competition is crucial to getting the full picture. And I'm particularly curious about this. They mentioned being named a leader in several Gartner Magic Quadrants, but they didn't really get into specifics about who they're competing with. It's almost like they're so confident in their position that they don't need to dwell on the competition. What do you think that means?
That's a great observation. It does seem like they're feeling pretty good about where they stand. Perhaps they see their AI-centric approach as really setting them apart. So in the next part, we can definitely explore the competitive landscape in more detail and see how their strategy stacks up against the other major players in the enterprise software world.
Yeah, I'm looking forward to it.
Welcome back to our deep dive into Workday. Before we really get into the competitive landscape, I think it'll be helpful to kind of step back a little bit and make sure that everyone listening understands what types of companies Workday actually competes with.
Yeah, that's a good point. I think sometimes we can get so deep into the weeds that we forget that not everyone listening is, immersed in the world of enterprise software.
Right. So just a quick recap. Workday focuses on cloud-based software for human capital management, or as it's often called, HCM, and for financial management. These are basically systems that help companies manage their employees and their finances, and they do this really well.
Okay, so who are some of the big names that they're going up against in this space?
Well, some of their main rivals include SAP, Oracle, and Microsoft. These are all really huge players in the enterprise software world, and they each have their own strengths and weaknesses.
So how does Workday differentiate itself from these giants? We talked about their big bet on AI, but what else makes them stand out?
Well, one key differentiator is their focus on user experience. Enterprise software can be notoriously complex and difficult to use, but Workday has always prioritized making their software intuitive and user-friendly. They've even won awards for their design and usability.
Yeah, it's like the difference between trying to navigate like a clunky old website and, a really sleek modern app. I guess no one wants to spend their workday wrestling with software that's hard to use.
Exactly. Happy users mean happy customers, which ultimately translates to a more successful business. Now, another point that's worth mentioning is their go-to-market strategy. So Workday relies heavily on direct sales. They have a really strong brand reputation and a dedicated sales team that focuses on building relationships with large enterprises. But they're not just relying on direct sales. They also have a growing network of partners.
Partners like consulting firms and system integrators.
Exactly. So these partners basically help implement and customize Workday solutions for their clients, which extends Workday's reach and influence. You can think of it like a network of ambassadors spreading the word and helping customers get the most out of Workday's products.
That makes sense. Now, I'm curious about pricing. How do their prices stack up against their competitors?
Well, their pricing is typically subscription-based, meaning customers pay a recurring fee based on the number of users and the specific features they need. Workday's pricing is generally considered to be competitive, but it can vary depending on the customer's specific requirements. It's not a one-size-fits-all kind of deal.
Right.
Mhm.
I imagine it's kind of like buying a car. The final price depends on all the bells and whistles you choose.
Exactly. And keep in mind that price isn't the only factor businesses consider when choosing software. Functionality, integration capabilities, security, the quality of customer support, these all play a huge role in the decision-making process.
Okay, so it's a complex landscape with lots of different factors at play. But circling back to Workday's competitive advantage, you mentioned earlier that their focus on AI could be a major differentiator. We talked about their next generation AI engine, Workday Illuminate. Can you tell us more about that and why it's such a big deal?
Sure. So Workday Illuminate is more than just a single product. It's really their vision for an AI-first platform. They're embedding AI capabilities across their entire product suite. Think of it as the brains behind all of their solutions.
So it's like they're building this AI foundation that's going to make all of their products smarter and more powerful.
Exactly. And they're already rolling out some pretty impressive features that are powered by Workday Illuminate. For example, they've introduced AI-powered agents that can automate tasks, like data entry and generating reports. They've also launched a Workday Assistant that can answer employee questions and help them navigate the system.
So it's not just about making things faster. It's also about freeing up people from these mundane tasks so they can focus on more strategic work.
Yeah, that's exactly the idea. Workday sees AI as a way to make businesses more efficient and more employee-centric. And this vision really aligns with what a lot of businesses are looking for, which is a way to leverage technology to improve their operations and create a better work experience for their employees.
It sounds very forward-thinking. But as with any new technology, there are potential challenges and risks. What are some things that they need to be mindful of as they continue to build out this AI-powered platform?
Well, one major challenge is making sure that their AI solutions are ethical and responsible. As AI gets more powerful, we have to be really careful about potential biases and make sure that AI is used in a way that benefits everyone.
Right. We've seen examples where AI systems can perpetuate existing biases, especially if they're trained on biased data.
Exactly. And while Workday doesn't go into specific details about their bias mitigation strategies in the reports that we have, it's definitely something they need to be very thoughtful about. They need to be really careful about how they design and train their AI systems to ensure fairness and avoid unintended consequences.
And transparency is important too, right? People need to understand how AI is being used and how it's affecting them.
Absolutely. Transparency builds trust, especially when it comes to using sensitive data, like employee information or financial records. So Workday needs to be open about how their AI systems work and what data they're using.
Okay, so ethical considerations and transparency are key. What about the technical challenges? Integrating AI into existing systems can't be easy.
Yeah, you're right. Integrating AI into these complex enterprise software systems requires a lot of technical expertise. Workday needs to make sure that their AI solutions work seamlessly with their existing platform and any other third-party systems that their customers might be using. It's not just about building cool AI features. It's about making sure that those features fit into the bigger picture.
Right, so they've got their work cut out for them. It sounds like a constant process of innovation and adaptation.
It is. And the AI field is changing so rapidly, they need to be constantly learning and evolving to stay ahead of the curve.
Okay, so we've talked about their competitive landscape, their focus on AI and user experience, and their go-to-market strategy. Now, I kind of want to switch gears a bit and dive into the nitty-gritty of their financial performance. We touched on some key figures earlier, but let's break it down a little bit further and really explore the specifics of their revenue growth, their profitability, and their cash flow.
That's a great idea. Understanding their financials is crucial for understanding their overall health and their ability to invest in future growth. What specifically are you curious about?
Well, they reported really impressive revenue growth for Q3, but I'm wondering about the breakdown of that growth. Like, where is this revenue coming from? Is it new customers, existing customers spending more, or a mix of both?
That's an excellent question. And
Yeah.
while the earnings report itself doesn't provide a super detailed breakdown, we can kind of glean some insights from their comments in the press release and during the earnings call. And it sounds like they're seeing growth from both new customer acquisitions and expansion within existing accounts.
So kind of a balanced approach,
Yeah,
which is generally a good sign for long-term sustainability.
exactly. It's like diversifying your investments. You don't want to put all your eggs in one basket. And their growth in subscription revenue backlog further reinforces this idea of a balanced and sustainable growth path.
Right. That backlog is basically a safety net of future revenue.
Precisely. Now let's talk about profitability. We mentioned their non-GAAP operating income earlier, but what about their GAAP profitability?
Yeah, I always get a little confused about the difference between GAAP and non-GAAP. Could you explain that to our listener and tell us how Workday is doing on both fronts?
Of course. So GAAP, which stands for Generally Accepted Accounting Principles, is basically a set of standard rules and guidelines for financial reporting. Non-GAAP figures, on the other hand, are adjusted to exclude certain costs that might not reflect the company's core operating performance.
So non-GAAP is kind of like filtering out some of the noise to see the underlying trends more clearly.
Exactly. It helps provide a different perspective on their financial health. So in Q3, Workday reported a GAAP operating income of $165 million, which is 7.6% of their revenue. This is up from an operating income of $88 million, or 4.7% of revenue, in the same period last year.
So their GAAP profitability is improving, which is a good sign.
Yes, it shows that their core business is becoming more profitable. Now their non-GAAP operating income for Q3 was $569 million, or 26.3% of their revenue. And this difference between GAAP and non-GAAP is primarily due to stock-based compensation.
Oh, that makes sense. Stock-based compensation is a real cost, but it's also an investment in attracting and retaining talented employees, especially in the tech world, where competition for talent is so fierce.
You got it. So it's important for investors to look at both GAAP and non-GAAP numbers to get the full picture. Now moving on to cash flow. How much cash are they generating from their operations?
Yeah, that's a crucial metric. Tell us more about their cash flow situation.
Sure. So their operating cash flows for Q3 were $406 million, compared to $451 million in the previous year. And their free cash flows, which is the cash that's left over after making essential investments in the business, were $359 million compared to $391 million in the same period last year.
Okay, so their cash flow is down slightly year over year. Is that a cause for concern?
Well, it's not unusual for a rapidly growing company like Workday to see some fluctuations in cash flow. They're making significant investments to support their growth, including their recent acquisition of Evisort. And acquisitions in particular tend to consume a lot of cash upfront.
Right, it's like buying a new house. You have a big initial outlay, but hopefully it's a good investment in the long run.
So what about their overall financial position? How healthy is their balance sheet?
Oh, their balance sheet is incredibly strong. They ended Q3 with $7.16 billion in cash equivalents and marketable securities, which are basically assets that can be easily converted to cash. And their debt levels are relatively low. This gives them a lot of financial flexibility to invest in growth, make acquisitions, or weather any potential economic storms.
So even though their cash flow is down slightly year over year, their strong cash reserves and their low debt give them a nice safety cushion.
Absolutely. They're in a very solid financial position. Okay, so we've covered their revenue growth, their profitability, cash flow, and their balance sheet. It sounds like they're firing on all cylinders financially. But as we discussed earlier, no business is immune to risks. What are some key factors that could potentially impact their financial performance going forward?
Well, the global economic climate is always a big one. If there's a significant economic downturn, it could impact their customers' willingness to spend on software. Businesses tend to tighten their belts during tough times, and software spending is often one of the first things to get cut.
Right. It's a risk that's hard to predict or control. What other potential challenges should investors keep in mind?
Competition is another ongoing challenge. The enterprise software market is fiercely competitive,
Right.
with rivals constantly innovating and trying to poach customers. So Workday needs to stay ahead of the curve and differentiate itself to maintain its market share.
It's like a constant arms race. They need to keep developing new and better weapons to stay ahead of the competition.
Exactly. And their success will also depend on their ability to successfully integrate their acquisitions. Like Evisort. Integrating different company cultures, systems, and processes can be a huge challenge, and if it's not handled properly, it can really hurt their financial performance.
So smooth integration is key for making those acquisitions pay off.
Absolutely. Investors should definitely pay close attention to how Workday manages these integrations going forward. Now, I want to take a step back for a minute and ask kind of a broader question. What does Workday's performance tell us about the future of enterprise software? Like, what big trends are shaping the landscape, and what implications do those trends have for businesses and investors?
That's a really interesting question. I think Workday's story offers some really valuable clues about what the future holds for enterprise software. What are some of the key trends that you're seeing?
Well, the shift to cloud-based solutions is definitely the biggest trend. Businesses are moving away from traditional on-premise software and embracing the flexibility, scalability, and cost efficiency of the cloud. And Workday's success is a prime example of this trend in action. They were born in the cloud, and their entire business model is built around cloud-based solutions.
Yeah, it's clear that the cloud is no longer just an option. It's the foundation for modern enterprise software.
Exactly. And another major trend is the rise of artificial intelligence. We've talked a lot about how Workday is leveraging AI, but this is a trend that's affecting the entire enterprise software industry. Companies that can effectively use AI to automate tasks, provide insights, and improve decision-making are going to have a huge advantage.
It seems like AI is moving from science fiction to practical reality
Yeah,
at an incredible pace.
it is. And businesses that don't embrace AI risk being left behind. Now, another trend that's becoming increasingly important is the focus on data security and privacy. As businesses store more and more sensitive data in the cloud, protecting that data is paramount.
Right. Data breaches and cyber attacks are becoming increasingly common and sophisticated. Businesses can't afford to be complacent about security.
Absolutely. Companies like Workday need to have robust security measures in place to protect their customers' data. This is non-negotiable in today's world.
Okay, so we got the cloud AI and data security. What other trends are shaping the future of enterprise software?
Well, user experience is another big one. As software becomes more complex and feature-rich, it's essential that it's also easy to use and intuitive. No one wants to struggle with a clunky interface or spend hours trying to figure out how to use a new system.
Right. User-friendliness is no longer a luxury, it's a necessity.
Exactly. Companies like Workday that prioritize user experience are likely to attract and retain more customers. Now, the question is, how is Workday positioned to navigate these trends and thrive in the future?
Yeah, that's the million-dollar question. What are your thoughts?
Well, as we've seen throughout this deep dive, Workday seems to be doing a lot of things right. They're already a cloud-native company with a strong focus on AI and user experience. They also take data security very seriously.
So on the surface, they seem pretty well positioned for the future.
They do. But they can't afford to get complacent. The enterprise software landscape is incredibly dynamic. New technologies and competitors are constantly emerging. So to stay ahead of the curve, Workday needs to continue to innovate, adapt, and anticipate future trends.
It's a marathon, not a sprint. They need to keep pushing themselves to stay at the forefront of the industry.
Exactly. And their success will depend on a number of factors, including the strength of their leadership and management team. What can you tell us about the people steering the ship at Workday?
Well, from what I've read, they seem to have a pretty impressive team at the helm. Their CEO, Carl Eschenbach, has extensive experience in the enterprise software industry, having previously served as the president and COO of VMware. And their CFO, Zane Rowe, brings a wealth of financial expertise from his previous roles as CFO of EMC and United Airlines.
So they've got a lot of experience and credibility at the top. What about their leadership style and their vision for the future of Workday?
Well, from what I've gathered, their leadership style is very customer-centric, innovative, and results-oriented. They seem to genuinely care about their customers and their employees, and they're really committed to building a company that is both financially successful and a great place to work.
Yeah, those are all admirable qualities. And it sounds like their vision for the future is to continue being a leader in the cloud-based enterprise software space, helping organizations achieve their goals and create a better work experience for their employees.
Yes, and their strong financial performance and growth trajectory suggests that they are well on their way to achieving that vision. But as we've discussed, there are always challenges and uncertainties to navigate. They'll need to stay agile and adaptable to stay ahead of the curve.
Absolutely. And as we move into the final part of our deep dive, I think it would be helpful to explore some of the specific challenges and opportunities that Workday is facing. What are some of the things that stand out to you that we should discuss?
Well, one thing that comes to mind is this. We've talked a lot about the increasing importance of AI and how Workday is embracing it. But as AI becomes more powerful and more integrated into our lives, the ethical implications become even more significant. How is Workday ensuring that their AI solutions are responsible and unbiased and aligned with human values? It's not just a technical question, it's a societal one as well.
That's a crucial question, and it's one that we'll explore in more detail in the next part of our deep dive. We'll examine their approach to AI ethics, their efforts to mitigate bias, and their commitment to transparency.
I'm eager to dig into that further. But for now, let's wrap up this part of our conversation. All right, so we're back. And we've covered a lot of ground in our deep dive into Workday, from their strong financial performance to their competitive landscape. But before we wrap things up, I really want to circle back to something we touched on earlier, which is the ethical implications of their AI-focused strategy.
Yeah, that's a really important point. And as AI becomes more powerful and pervasive, we really do need to think carefully about its impact, on individuals and society as a whole.
Exactly. So how is Workday approaching this challenge? Like, what concrete steps are they taking to ensure that their AI solutions are ethical and unbiased and transparent?
Well, it's interesting because these reports, they focus very heavily on financial performance, but they don't always dive deep into the nuances of, ethical frameworks or bias mitigation techniques. However, I think we can glean some insights from their public statements and the overall direction of their AI development.
Okay, so reading between the lines, what clues can we find?
Well, one promising sign is their emphasis on what they call human-centric AI. They're not just talking about automating everything. They're really framing AI as a tool to augment human capabilities, not to replace humans altogether.
So it's about humans and AI working together, not about AI taking over.
Precisely. And this is where transparency comes in. For AI to truly benefit humans, we need to understand how it works. And Workday has been increasingly vocal about the need for what's called explainable AI. So that means creating systems where, the reasoning behind a decision that's made by an AI can be understood by humans.
That makes sense. If you're going to trust AI to make important decisions, you need to know why it's making those decisions.
Exactly. Now, on the issue of bias, it's really critical to remember that AI systems are only as good as the data they're trained on. If that data reflects existing biases in society, the AI is likely to perpetuate those biases, which could have really negative consequences for individuals and groups.
Right. We've seen plenty of real-world examples of AI systems reflecting and amplifying societal biases. It's definitely a concern.
It is. And while Workday hasn't explicitly laid out, all of their bias mitigation strategies in these reports, their emphasis on human-centered design suggests that they're aware of the issue. And they're likely using a combination of approaches, like using diverse data sets, bias detection algorithms, and human review processes to try to minimize bias in their AI systems.
So they're trying to build safeguards into the system from the ground up.
Exactly. It's an ongoing process. And the real test will be how these principles are put into practice as their AI technology matures.
Okay, so there's a lot happening behind the scenes, and it's something to definitely watch closely as AI becomes more integrated into Workday's products. Now let's shift gears a bit and talk about their acquisition of Evisort. How do you see this playing out, and what does it mean for their overall strategy?
Well, this acquisition is really interesting because it's not just about adding features. Evisort brings this deep expertise in AI-powered document understanding, which is a field that's becoming increasingly crucial for businesses.
Right, think about all the contracts, invoices, legal documents that businesses have to deal with. Managing all that manually is incredibly time-consuming and inefficient.
Exactly. And Evisort's technology can automate much of that, freeing up human resources for more strategic work. So integrating this into Workday's platform could give them a significant advantage in terms of efficiency and data analysis capabilities.
And it also really reinforces their commitment to AI as a core part of their strategy. It's not just AI for HR or finance, it's AI woven into the fabric of how businesses operate.
Precisely. But as with any acquisition, integration is key. Combining two companies' technologies and cultures is never seamless, and how well Workday handles this will ultimately determine the success of the acquisition.
So it's a potential game changer. But it also comes with risks. Speaking of risks, let's talk about their growth projections. Aiming for continued double-digit revenue growth is ambitious, especially in the current economic environment.
It is. And while they haven't given us like a super detailed roadmap, we can make some educated guesses based on their statements. So their focus on customer consolidation, which is basically encouraging existing customers to adopt more Workday products, is likely going to be a key driver of growth going forward.
Yeah, that makes sense. It's generally easier and more cost-effective to expand relationships with existing customers than to constantly acquire new ones.
Exactly. And their emphasis on AI-driven innovations will also play a crucial role. As businesses increasingly look to AI for solutions, Workday is well-positioned to capitalize on that demand.
But it's a competitive market. How confident are they in their ability to maintain this growth trajectory against, giants like SAP and Oracle?
Well, their consistent recognition as a leader in the Gartner Magic Quadrants for both HCM and finance solutions speaks volumes. It shows that they're consistently delivering high-quality products that meet the needs of large enterprises.
So it's not just marketing hype. They're being recognized by independent industry analysts as a top performer.
Exactly. But, and this is a big but, the enterprise software landscape is always evolving. New players emerge, technologies advance, and customer needs change. So Workday can't afford to rest on its laurels. They need to stay agile and adaptable to maintain their leadership position.
So it's a never-ending race to innovate and stay ahead of the curve.
Absolutely. Now, stepping back for a moment, I think Workday's story offers some really valuable insights into the future of enterprise software as a whole.
I agree. What are some of the key takeaways that you think our listeners should keep in mind?
Well, first and foremost, the cloud is the foundation. Companies that aren't fully embracing cloud-based solutions are going to be left behind. And Workday's success is really a testament to that. It's built on their cloud-native architecture.
Yeah, the cloud isn't just a trendy buzzword anymore. It's really a fundamental shift in how software is built and consumed.
Exactly. Second, AI is the new frontier. Workday's aggressive investment in AI is a clear sign of where the industry is headed. Companies that can effectively leverage AI to enhance their offerings will have a significant competitive advantage going forward.
And it's not just about any AI. It's about AI that's ethical and explainable and aligned with human values.
Precisely. Third, customer experience is paramount. As software becomes more complex, ease of use and intuitive design are absolutely essential for adoption and satisfaction. And Workday's focus on user experience is definitely a key ingredient in their success.
So it's a combination of cutting-edge technology and human-centered design.
Right. And finally, continuous innovation is the only constant. The enterprise software landscape is so dynamic, and it's constantly evolving, so companies that can adapt and evolve and anticipate future trends are going to be the ones that thrive in the long run.
So it's a combination of vision, execution, and agility.
Absolutely. Workday's journey is far from over, but they seem to be on the right track.
This has been a really fascinating deep dive. We've explored Workday's impressive financial performance, their competitive landscape, and the broader trends shaping the enterprise software industry. But before we sign off, do you have any final thoughts for our listeners? Something to kind of leave them pondering as they continue their own exploration of Workday and the future of work?
Yeah, absolutely. Here's a question to consider. If AI is truly going to revolutionize how businesses operate, what skills and mindsets will be most valuable in the workforce of tomorrow? It's something for all of us to think about as we navigate this rapidly changing landscape.
That's a great point, and it's definitely something that we all need to be thinking about. And for our listeners who want to delve deeper into the source material, we've included links in the show notes. Thanks for joining us on this deep dive. Until next time, keep exploring it.